In a world where innovation propels us forward, one company dared to dream larger, push boundaries, and transform transportation as it exists now. But what happens if there are a few unexpected turns in the road leading to success? Today, we explore the intriguing history of the company that not only sparked the stock market but also our roadways, and we unearth the startling reality behind Tesla's recent wild ride. We are going deep into the fascinating realm of Tesla's stock slide, exposing the hidden factors, cracking the market's riddles, and disclosing the invisible stories that have led to this significant turning point. Join us as we sort through the hype and reveal the truths that even the most resilient people can run against. Make sure to like and subscribe to Tesla Stock News first, though. We can go with the video at this point before going any further. A small percentage of investors are now veering away from the stock market and investing more of their money in bonds and cash. Our colleagues at Yahoo Finance, Jared Blaker, is with us at the New York Stock Exchange to bring us further details. Bank of America strategists have been looking into this, at least when it comes to inflows. The equities market isn't very exciting this week, but inflows into cash and money market funds are still strong. It's noteworthy that cash inflows have reached $145 billion this quarter. Michael Hartnett talks about the flows this week, which are also noteworthy because they are faster than those of the previous quarter. He claims that strong inflows of $127 billion have been made into treasuries, those dependable government bonds, so far this year, and that record annualizing inflow of $26 billion is anticipated. When it comes to money flow, healthcare seems to be receiving some attention, but at least this week there isn't much excitement for stocks. Cash and money market funds are the real stars when it comes to inflows. This quarter, they have raked in an astounding $45 billion, which is quite the haul. In reference to the money flow game, Michael Hartnett of BofA has noted that this week's inflows are occurring at a significantly faster rate than those of the previous quarter. The Treasury, which had a significant debut this year with steady inflows of $127 billion, should not be disregarded. If the project continues at its current rate, it may ultimately cost a record $26 billion. Let's now concentrate on Tesla, the main attraction. The Federal Reserve's interest rate policies, the enthusiasm surrounding the Cybertruck, the company's Q3 earnings, and the EV revolution are all having an impact on the performance of Tesla shares. Let's focus on the last one, the switch to electric vehicles, and the significant changes it is bringing about in the transportation industry. This, my friend, is a total transformation rather than only a fad. Think about this: dependable internal combustion engine vehicles are about to be surpassed by electric cars. Why? It's a confluence of things, really, such as how we as consumers are evolving, how fantastic technology is, and how little of an impact there is on the environment. Everything suggests that the world of electric automobiles is developing quickly. Tesla has seen tremendous success in the first half of the year with its rides selling like hotcakes, partly because of their astute pricing strategies. As we approach the second half of the year and the interest rates decide to take a vacation, we're all curious to see how those automobiles do on the sales front. Tesla has maintained its competitiveness with premium pricing, and as manufacturing has expanded, the company has gained market share in the commercial sector. But occasionally, you have to nuzzle the market to embrace new concepts. Price reductions appear to be tapering down based on recent action in the car market. They seem to be drifting away from that proactive approach. According to experts, the price cuts will almost certainly end soon. What is my focus right now is the discussion about who will have the biggest market share. In terms of price and technology, there's a lot of action going on here. Tesla has demonstrated remarkable hustle by consistently staying ahead of the curve and gaining market share. They are a strong competitor in the market because of their considerable advantages in terms of vehicle design and production cost reductions. Moreover, they can agitate matters by implementing additional price reductions if needed. Even while it might not take center stage for the rest of the year, you can be sure they have something special planned for it. Tesla isn't your usual car company. Recently, their stock has taken center stage and has been developing quickly. This company has been breaking records left and right, and they plan to break even more. If they keep hitting the right chords, we might soon see that stock market meltdown. People are interested in the possible returns on their investment in Tesla, as the company has been a significant participant in the automotive industry for a while. It is, after all, a gamble. There exist several market characteristics that can somewhat anticipate future stock values. Looking toward the future, we're in full gear when it comes to cars. Big towns and even whole countries are declaring that they will stop using cars with conventional combustion engines within the next 10 or 20 years. This is really upping the ante when it comes to electric vehicles, and governments everywhere are doing everything they can to make electric cars more affordable by providing tax cuts, rebates, and lower registration fees. It appears as though EVs are receiving special care. Tesla seems to be the heavyweight champion of this electric vehicle circus. If they can take the lead and get 50% of all EVs on the road in the future, just think of the money that will flow in. They don't even talk about any other secrets they might have that solely has to do with cars. Tesla is the only player with a chance to win this, I can promise you of that. Giving due credit where credit is due, Tesla has led the electric vehicle revolution without a doubt. EV's cutting-edge technology and Elon Musk's charisma have people talking about them more than ever. Remember the time when EV charging was rife with issues? Thankfully, it is no longer an issue because they have been spending a substantial sum of money to expand the charging network. Additionally, production costs are falling as more EVs are driven, which is good news for cost-conscious consumers. Now let's go back to discussing Tesla's financial runway. In the first quarter of the previous year, they produced a whopping $18.8 billion in revenue, a substantial 42% increase over the same period the year before. Sure, a few delivery hitches caused a tiny dip in the second quarter, but even in that regard, their production output was significantly higher than that of their competitors. They saw an 81% increase in business in 2021 from their car delivery service. Let's compute some numbers now. Imagine a situation where Tesla produces about half of the 20 million cars Musk has predicted by 2030. A stock price of roughly $3,120 per share might be anticipated in such a situation. Sales of Tesla vehicles might bring in a healthy $60 billion for the corporation if the average price in 2030 is $60,000. When you total up all of their revenue streams, you get an astounding $90 billion even before you deduct 15% for other fascinating industries like robotics and batteries. After careful calculation, the total comes to $3,120. Hold on to your hats. Tesla's gross revenue might reach an astounding $1.56 trillion if Musk's audacious plan comes to pass and the company sells around 20 million cars by 2030. You did hear that, that's true. Furthermore, their stock price may surge to $1,700 per share if their non-automotive industries generate approximately 30% of that revenue. Though it sounds like a place out of a fairy tale, stranger things have happened there. Yes. But keep in mind that these are all merely well-informed speculations. A few interesting things are coming up for Tesla, including the Q3 earnings report, the Cybertruck frenzy, and potentially more favorable interest rates. If these circumstances materialize, we may be seeing the beginning of a golden age of investing. As usual, however, remember to complete your assignments, conduct research, study, and remember that your personal judgments and limitations matter. I'd like to hear your thoughts before we wrap up. How do you feel about Tesla's role in the electric vehicle revolution? Do you see them cruising toward supremacy, or are there impediments in their way? Are you enthusiastic or apprehensive about their stock prospects? Which of your predictions for Tesla's future is the most audacious? By the way, feel free to comment in the space provided below. Please click the like button if you enjoyed this in-depth study, turn on the notification bell, and subscribe to Tesla Stock News if you want to stay informed about everything related to Tesla.